Did you know that over the past 20 years, dividend yield stocks have outperformed the S&P 500 by more than 2% annually? Yes, that's right. Now let's take a moment to appreciate the power of dividend yield stocks. These are the stocks that not only offer potential for capital appreciation, but also regularly pay out a portion of the company's earnings to their shareholders in the form of dividends. Over time, these dividend payments can significantly boost your total returns from an investment, making them a compelling option for many investors. In the last 2 decades, dividend yield stocks have consistently shown strong performance, often outpacing the broader market. This is a testament to the lasting power of dividends and the role they can play in a well-rounded investment strategy. But what makes these stocks so appealing? Well, there are a few key benefits. First, they provide a steady stream of income, which can be particularly appealing for those in or nearing retirement. Second, they offer a buffer against market volatility, as companies with a history of paying dividends are often more stable and established. Lastly, reinvested dividends can help to compound your returns over time, leading to significant wealth accumulation. Now, let's delve into some specifics. We've got a list of 10 high dividend yield kings that have been reigning supreme in this domain. These are Altria Group, Legot and Plat, 3M Company, Universal Corp, Northwest Natural Holding Company, Canadian Utilities, Black Hills Corp, Foris, Federal Realty Investment Trust, and Kenvu Inc. They boast impressive dividend yields ranging from a solid 2.9% to a whopping 9%. These companies represent a diverse range of industries, from tobacco to utilities to real estate investment trusts, showing that high dividend yield opportunities can be found in nearly every corner of the market. Today, we'll walk you through the top 10 highest dividend yield king stocks, and who knows, you might find your next big investment. So, let's get started and explore these dividend yield titans in more detail. Before we dive into our top 10 list, it's crucial to understand what dividend yield is. Think of dividend yield as a financial compass. It's a tool that helps investors navigate the vast world of stocks by showing how much bang you're getting for your buck in dividends. Simply put, dividend yield is the annual dividend payout of a company expressed as a percentage of its current stock price. Let's break it down with a simple example. Suppose a company, let's call it Company X, pays an annual dividend of $1 per share. If the current stock price of Company X is $20 per share, you calculate the dividend yield by dividing the dividend, $1, by the stock price, $20. The result is a dividend yield of 5%. Now, why is dividend yield important? Well, it gives investors a sense of the income they can expect from investing in a stock relative to its price. It's like shopping in a supermarket. You want to get the most value for your money, right? By comparing dividend yields, you can identify which stocks offer the most income return for your investment. But remember, a high dividend yield isn't always a good thing. It could indicate that a company's stock price has fallen, and the high yield may not be sustainable. It's essential to look at the company's dividend history and its ability to maintain or increase its dividend over time. Also, keep in mind that not all companies pay dividends. Some, especially those in growth phases, prefer to reinvest their profits back into the business rather than distribute them to shareholders. So while dividend yield is an important tool, it's not the only factor to consider when choosing stocks to invest in. Now that we have a solid understanding of dividend yield, let's explore our list of top-performing dividend yield kings. Kicking off our list, we have Altria Group with a whopping dividend yield of 9%, followed closely by Legot and Plat at 8.8%. Altria Group, known by its ticker symbol MO, is a heavyweight in the tobacco industry, and it's no secret that this sector has been a traditional favorite among income investors. Altria's robust cash flow generation, coupled with a commitment to returning capital to shareholders, has led to this attractive 9% yield. But it's not just about the numbers. Altria's strategic investments in the vaping and cannabis industries illustrate its adaptability in a changing landscape, potentially providing a solid foundation for future growth. Now let's shift gears to Legot and Plat. This Missouri-based manufacturing company has been around for well over a century, producing a diverse range of products from bedding to automotive seat support. Legot and Plat, represented by the ticker symbol LEG, has a long history of consistent dividend payments. The company's diversified business model, along with a strong focus on innovation, has been key to maintaining its high yield. Its 8.8% yield is a testament to its financial strength and commitment to shareholder value. But let's not overlook the factors contributing to these high yields. A company's dividend yield is a reflection of its share price as well as the dividends it pays out. A high yield could indicate a low share price, perhaps due to market uncertainty or company-specific challenges. It could also reflect a company's generous dividend policy. In the case of Altria and Legot and Plat, it's a mix of these factors. Both companies have seen their share prices under some pressure, but they remain committed to paying out substantial dividends. Impressive yields, right? But we're just getting started. Next up on our list we have 3M Company and Universal Corp, both boasting a healthy dividend yield of 6.3%. Let's dive into 3M Company first. This is a multinational conglomerate that operates in the fields of industry, worker safety, healthcare, and consumer goods. Over the years, the company has been able to maintain its place among dividend yield kings thanks to its strategic decisions and diversified portfolio. 3M's dividend yield of 6.3% is a testament to the company's commitment to returning value to its shareholders. The company's long-term stability, combined with its innovative approach, has resulted in a steady stream of income for those invested in their stock. Moving on to Universal Corp. While it may not be as globally recognized as 3M, this company has carved out a niche for itself in the tobacco industry. Universal Corp is the world's leading leaf tobacco exporter and importer. The company's robust dividend yield can be attributed to its strategic positioning within a niche industry. While the tobacco industry faces challenges, Universal Corp has demonstrated its ability to adapt and thrive, contributing to its impressive dividend yield. What's noteworthy about both 3M and Universal Corp is their consistency. These companies have not only offered dividends, but have also increased them over time. This is a clear indication of their commitment to shareholder value. Another factor that's contributed to these substantial yields is the company's strategies. Both 3M and Universal Corp have shown an ability to navigate market changes and adapt their business strategies accordingly. This adaptability has helped them maintain their profitability and, in turn, their ability to pay dividends to shareholders. In essence, 3M Company and Universal Corp embody the power of dividend investing. They've proven that with the right strategy and a commitment to consistency, it's possible to deliver significant returns to investors. These companies show that consistency and strategy can yield significant dividends, and that's what makes them stand out in the world of dividend yield kings. Moving on, we have Northwest Natural Holding Company with a dividend yield of 5% and Canadian Utilities at 5.7%. Northwest Natural Holding Company, often referred to as NWN, is a respected player in the utilities sector. With a long history spanning over 160 years, this company has been delivering natural gas to homes and businesses across the Pacific Northwest. Their consistent performance and commitment to shareholder value are reflected in their 5% dividend yield. NWN has consistently paid dividends without fail, even during turbulent times, making it a reliable choice for income-focused investors. The company's ability to maintain a steady dividend payout stems from its robust business model and strong foothold in the natural gas market. On a similar note, let's talk about Canadian Utilities. A subsidiary of ATCO Limited, this company is one of Canada's largest utility providers. Canadian Utilities has a wide range of operations from electricity and pipelines to retail energy. It's a company that's been around for a long time and it's known for its stability. Canadian Utilities' dividend yield of 5.7% is a testament to its solid financial performance and commitment to returning capital to shareholders. The company's consistent dividend payments are backed by its diversified operations and strong presence in the Canadian market. In both cases, these companies' high dividend yields are not just about the figures. They're a reflection of the company's financial health, stability, and their commitment to sharing profits with shareholders. These are companies that have stood the test of time and have consistently delivered value to their shareholders. Investing in companies like Northwest Natural Holding Company and Canadian Utilities can provide a steady income flow through their dividends. But as always, it's important to balance these investments with others to ensure a diversified portfolio. Remember, a company's dividend yield is a reflection of its financial health and stability. Rounding off our list, we have Black Hills Corp. Foris, Federal Realty Investment Trust, and Kenvue Inc., with dividend yields ranging from 2.9% to 4.6%. Let's start with Black Hills Corp., a diversified energy company with a dividend yield of 4.6%. This company operates in the utilities sector, an industry known for its steady cash flow and consistent dividends. Black Hills Corp. Has been a reliable dividend payer for years, with a strong track record of increasing its payouts. Moving on to Foris, a leading North American electric and gas utility company. It sports a dividend yield of 4.2%. Foris has a solid history of dividend payments backed by a diverse portfolio of utility assets that generate stable earnings. The company's commitment to sustainable energy also positions it well for future growth. Next up is Federal Realty Investment Trust, a real estate investment trust that focuses on high-quality retail properties. With a dividend yield of 4.2%, Federal Realty stands out in the real estate sector for its long history of dividend increases. Its success is largely due to its strategic property locations and high occupancy rates. Lastly, we have Kenvue Inc., a tech company with a unique twist. Despite being in a sector not typically known for dividends, Kenvue rewards its shareholders with a 2.9% yield. This is possible due to its robust cash flow generation and low debt levels. Each of these companies has a unique story to tell, and they all share a common theme: a commitment to rewarding shareholders with consistent, high-yielding dividends. These are the types of companies that can provide a solid foundation for any dividend-focused investment portfolio, offering a mixture of income and potential for capital appreciation. While these yields may be lower than others on our list, they still offer significant returns for investors. While these stocks have impressive yields, it's crucial to do your own research before investing. The world of investing can be a labyrinth of information. It's easy to get lost in the vast ocean of numbers, trends, and financial jargon. And while it's tempting to follow the crowd, the real key to success lies in doing your own homework. You see, investing isn't a one-size-fits-all strategy. It's a personal journey that requires understanding your own financial goals. Are you investing for long-term growth or short-term gains? Do you want a steady stream of income, or are you more interested in capital appreciation? Your answers to these questions will significantly affect your investment decisions. Equally important is your risk tolerance. Not all investments are created equal. Some, like Altria Group or Legot and Plat, come with high yields but also potential risks. Others, such as Kenvue Inc., may offer lower yields but are perceived as less risky. It's crucial to understand your comfort level with risk before diving into the investment pool. But it's not just about understanding yourself, it's also about understanding the market conditions. The financial landscape is constantly changing. Economic indicators, geopolitical events, and even weather patterns can impact the performance of your investments. Keeping a close eye on these variables can help you make informed decisions and mitigate potential risks. Moreover, don't forget to dig into the company's fundamentals. Look beyond the dividend yield. Check the company's balance sheet, income statement, and cash flow statement. Are they financially healthy? Is their business model sustainable? And finally, keep in mind that while dividend yield is an important factor, it's not the only one. There are other aspects to consider, such as the company's growth prospects, its competitive position, and the overall industry trend. Investing in dividend yield kings can be a profitable move, but remember, it's essential to make informed decisions based on your individual circumstances. Investing in dividend yield kings can provide consistent returns over time. This is the principle we've been exploring throughout our journey today. We've looked at 10 exceptional companies, each with its unique strengths, but they all share one common feature: impressive dividend yields. Dividend yield stocks like Altria Group with a yield of 9%, or Legot and Plat with a yield of 8.8%, offer the potential for steady income. Moreover, they can help diversify your portfolio and provide a cushion in times of market volatility. Companies such as 3M and Universal Corp with yields of 6.3%, or even Kenvue Inc. with a yield of 2.9%, demonstrate that investing in these stocks is not just about chasing the highest yield. It's about finding companies with a history of reliable and growing dividends. So consider adding some dividend yield kings to your portfolio. These stocks could potentially boost your investment returns and provide a steady income stream.